You already knowing what it is. Come on, come on down and get them what figure Hollywood trades. All right, it's really something that has been requested. Because a lot of people don't understand it. I don't know if anyone really has broken it down probably enough. I don't know. There are people that talk about it, and there are a lot. There's actually some of the like Twitter. I want to say the Nigerian traders. There was like a couple Nigerian traders that I've seen use it. We're gonna dig into a chart that I already have marked up. So you guys already know my charts that have seen it. They can get pretty wild, but I try not to put too much on there that is not valid, right? As you can see, the things that I do have marked are the things that are being interacted with. Anybody who knows me knows I try not to keep anything too much extra on the chart. All right, let's just get straight to it. The Reaper iFVG. What makes a Reaper more powerful than a normal iFVG? And this isn't even the most powerful Reaper that would be here. This is just a relative Reaper, right? It's an iFVG that comes from the discount range, either anywhere between equilibrium and discount range. This is technically still above the relative what I have measured of the PD, right? This is still above the relative, but it exists enough at the equilibrium to where as price and algorithm interacted with the midline, it was just a really strong interaction there, because usually it would come above the midline, but it can continue from the midline. That is a trend continuation entry point. So we're on the daily. This can be a trend continuation entry point, but it's actually a reverse entry, which you wouldn't expect. You would actually expect it to come to the discount range and then straight back into the premium and go away. But we've already had all kind of bearish key ends over here. So you can expect that this will be just a different type of run up PD where it does come down and you have the option now. You have a targeting for here, which you didn't have before. So that kind of confuses the bullish bearish type of array, and this is where you would want to be bullish from, more so in the deeper discount area in this type of array if you wanted to be bullish. But really, this is telling us when your price takes over a zone, right, like a bullish zone, when price takes over a zone, we always expect that zone to become a resistance or support. That's just what we expect. So this is not too far off from normally what you would expect, except for a Reaper is deeper in. So what happens at a Reaper is this: you have a lot of buyers here, right? This is an iFVG as well, and you have a lot of buyers that got in here, but you didn't have as many buyers as you got in here or here. So this would actually be the strongest Reaper. If this got traded through like this would actually be the strongest Reapers, because this was more of accumulated buy zone. So it's your rating. It's a rating. So technically you could have, a rating system, right? In all interactions, all artifacts of price action. It's just rating. This was more of a flip because it happened in the highest premium. So we expect this. This isn't expected to get traded through type of zone. Like, it's a strong zone and it acts as a good zone when you trade through it and then you come to it and then you sell off. Like that was an option here. But there just happened to be so much bearish interaction that it went through this zone as well. And you wouldn't expect it to really go through this zone. You expect this to act as a bullish entry. You got a bullish order block, and then you have an FVG. That's the classic buy entry. So we should have at least been able to get a couple days up from here back to this zone at least, and then down. So if you forecast this price from up here, you would have forecasted this to this to this. That's what you would forecast, or maybe even more, slowing down, whatever after that. But all these three zones were stopping points for price. So when you look at the price, you expect price to use all of these stopping zones. You expect price to use all of these stopping zones as a cushion on the way down. And so that's basically how the rating would work. Like this would be the weakest right here because there would be the least bulls. This would be the medium range. And it's interesting that this PD actually used all three different strengths in here. I didn't even really notice that until just now, but there's 3 FVGs and they're all three to be expected to be 3 different strengths. This is the strongest one. This one did not get disrespected, right? And so this would be also a Reaper, more of a Reaper on the daily. Actually, this is more of a daily Reaper. This one was more of a 4-hour Reaper because it was more so in the discount range of the 4-hour. So that's why I saw it on the daily, and it didn't. This was actually more balanced right here. It's on the 4-hour, but on the daily it still existed. So maybe this being balanced here maybe had something to do with the whole interaction coming down and being able to slide through there a lot easier because you had a target here, I believe. Because if this only had dipped this much, if this one had dipped like this and then this one dipped into it, you know how it goes with FVGs, you dip into it, then the next one comes up, then the next one dips into it past this one, eats the external, then the internal, and then goes. This one actually cleared the whole thing, so on your way down, your targets are here because you use pivots. You don't just use lows. You want to use lows and pivots, and these are the strongest ones. So right here, you see there was resistance here because this was the first pivot fractal low, right? And so now we're getting into a whole nother video, the difference between fractal lows and fractal highs. I might go into that next, but basically this existed on the daily. So with this being an interaction point on the daily, and you expect it to be a really sharp zone by algorithmic standards, and so as we see it, used it and then it went right through it, right here, it went straight through it. So it created this area all at once. It wanted to use this zone as a liquidity zone, and it's just a high liquidity zone, right? We trap institutional order flow. And so this zone right here is just a really strong liquidity zone. That's all they are. They're iFVGs, right? There's one here on the daily, one here, and one here. They're just strong interaction zones where a lot of orders can be transacted by institutionals, hedge funds, banks, whatever. And so that's what that's for. So as it comes back up to it again, so we have this one here. Once it trades through it, if it does trade through it, we expect it to come down, bounce up to it, and either fall back or fly straight through it. That's why I said I never try to really engage in what will happen here, because the interaction is usually so strong that afterwards you can know. Like when it interacted with this on Friday last session, it was super strong right at the edge of it, right? And we have that pinned right to the edge of the daily iFVG. So that boundary is just there. Of course, we have this interaction zone here, and we have an order block here, right? This is order block territory. All of this whole thing is an order block. Mean threshold of an order block is here, right, of the whole order block. And then of course, right, I always want to see manipulation into the highest part of the order block, right? This is the order block. This is the highest body of the order block on the 4-hour, probably the hourly as well. And I expect it to manipulate up there with a wick, and you expected it respect mean threshold. And so with all of this being in the PD plus the stark boundary where they can really interact with that liquidity. That's what that was. This is a forced interaction. So you have a soup point where you absorb external into internal, into the wall of orders, into a super liquidity zone, right? So this is fuel for this whole interaction. That's why it was a little sharper. So that's how you can use Reapers. Reapers are they develop into really sharp areas of price. And so that is the Reaper of this zone, because you have the 50% of this stretch up, right? This is a stretch up as well. So technically this is also a Reaper, right? I didn't add this as a Reaper because, again, if you take this stretch up, right, this stretch here, this one also is a Reaper. All of this below, all of this should be acted on as a buy zone. There's a bullish order block. There's a lot of imbalance, right? And so there's an old Reaper here, right? And that may have canceled out this whole zone being, you never know. They were able to interact with so much liquidity inside of this old Reaper as well. It just allowed them to just keep going. Let's just say maybe that's the narrative, that this zone allowed them to keep pushing through this. And then they didn't even need to mitigate any of this. If you notice, this is what I've been so interested in this PA, because they didn't even have to mitigate any of this, which is weird. Usually you come down, you hit all of this, right? And then you come back up to let go of longs, to let go of more longs. So anybody who got caught long here did doubly dirty, because now, right? I'll just use this one, right? So let's just say I actually had a Reaper zone up there. So let's just say this is the 50%, right? So let's just say that all of this is a Reaper. You would expect this zone to act quirky, right? Because they traded all the way through it. So yeah, it was quirky, all right. It didn't even have to go back into it a lot. It went slightly back in. It traded through this gap right here too. Well, this is not really a gap, but let's just say it didn't even have to come back to it. And so this is how Reapers interact on price. They're just super high liquidity zones that it was in the discount and got traded through shorter. It was in the premium, right, and got traded through long, because you expect those to deliver those orders. Whatever orders sit there algorithmically, you expect them to be delivered before further interaction into the sell side or buy side. It did not do that. It disrespected this zone. So it's just order flow theory. They are really wanting to get out, right? They're like, no, this is bearish. That's basically what it says. When you trade through the discount range like this, how this did, right there's the 50%, and it traded through it. That's basically signing to all the people, the massive amounts of millions of orders right here, that this is bearish. Get out now. And it just waterfalled these stops. You could just imagine there's stops all here. Waterfall those. And it just waterfalled everybody. So everybody here got knocked out. Most of the people here got knocked out. And if they are still holding, they are still negative. And as you can see, they probably went so far negative. A lot of these orders went so far negative that when it comes back up, it's just, they're trying to get out. They don't want nothing to do with this. This was crazy. This was 1,000 pip drop. This is crazy, And so you have to keep all that narrative in mind. Like, these people are safe. So these bulls, they're still in, but they're like, anybody who's holding positions here, even algorithms that are holding from here, they're starting to mitigate, right? It's starting to mitigate even. So it's looking like we're targeting this array here, and so eventually this will become an iFVG on a daily, but it will not become a Reaper. And so, not yet. Well, I won't say it won't be a Reaper, because it slowly got eaten into, right? This was the whole FVG, right? But it's slowly getting eaten into. A lot of people wonder why I take my FVGs and change the location of them. This is another little trick. It's because this is called a body purge. This was a body purge. Then there's a second body purge. So the first body purge happened there. So I would put it at the body. And ICT does teach the body purge in rejection block theory. So basically, this is a rejection block that is using the bodies. The bodies, of course, the wicks, right? Like the wicks too. But really, the body of this candle here, and I'll get up to a lot of this. There's a lot of little small details in Michael Huddleston's discourse that just like these Reapers, right? And so that's pretty much it for the Reaper. Again, then this is what I would use for the Reaper zone. If I use this as a Reaper, I would use from this body. If it throws a body over this, then this is the sharpest zone of this iFVG. And this is the zone that will act. This very zone that we have marked here will be the zone that gets used, right? Not the whole one, but this last little piece. If it comes with a body and then rejects, right? And then it'll get smaller. So if it uses this zone again, and then I'll probably still just turn it into a regular iFVG by that point. By this point, it would probably be a regular iFVG because it's pretty much balanced it all out. This is no longer a sharp zone. It's been, the robots in this zone have been given warning, right? So they won't have to transact so many interactions. And then you have all this accumulation here too, as you know, as backdrop, as back noise, as no background noise to this whole PD range. But all this here, like this here, this was a sharp liquidity. So that's basically, it's a sharp liquidity that happened in some relative discount range, and that's why that's like that. Hope that makes sense. Share this video to anyone who needs to really understand what a Reaper liquidity wise means. And go ahead and like, follow, subscribe. Adios, amigos.